Welcome to You and Your Money. Today's episode features Lawrence Hale, Senior Partner and Chief Investment Officer at WHZ Strategic Wealth Advisors.
So let's talk about the headlines now. It feels like every day there's another story about unrest here at home or conflict overseas. And for a lot of investors, that's unsettling. How should people think or react in this kind of environment?
Well, headlines can be scary, and if you think about it, if you were to jump on an elevator and before you got on the elevator, you saw two words, plunge and soar, next to the buttons. Would you push those buttons? Well, a lot of it has to do with how different news is presented, and it can be scary. But that reaction from people is completely understandable, Gary. And investing is inherently an optimistic exercise. You're betting that the economy and corporate earnings are going to be better in the future than they are today. But when you're reading about different wars, political division, global uncertainty, it can be hard at times to stay optimistic. But when we look at history, what that shows us is markets have lived through all of the above before. Political unrest, even major wars, have not prevented long-term investment growth.
So let's give us some examples from history that really drive that point home.
Yeah, a really powerful example. It's been quite some time, but was World War II. In the years leading up to the U.S. entering the war, markets really struggled. But once the U.S. entered the conflict, stocks actually rallied for several years in a row. Now, that's a long time ago. It's some more recent events, but still historical. We look at this pattern of other shocking events and assassinations, such as the assassination of John F. Kennedy, of Dr. Martin Luther King Jr., civil unrest in the 60s, Rodney King riots in 1992. All these cases, the markets recovered and moved higher over time.
All right. What about more recent history? Like, we remember 9/11 and the pandemic, of course. What about that?
Those are great examples as well. And, 2001, the markets were already dealing with the aftermath of the dot-com and tech bubble when 9/11 occurred. And that made the downturn worse in the short term. So even then, markets went on to rally strongly in the years that followed. And during the pandemic in 2020, we saw one of the sharpest market sell-offs in history, and yet the market finished the year up in double digits after recovering from that initial shock.
All right. So the takeaway is that uncertainty doesn't necessarily mean investors should start to panic.
There's always something to worry about. And that's exactly right, Gary. The world has always been uncertain. The key difference between successful long-term investors and unsuccessful ones is really discipline. Historically, investors who have stayed the course during volatile and frightening periods have been rewarded over time. And the challenge is really managing emotions and having a plan before volatility hits, not reacting to it in the heat of the moment.
Again, reassuring message, especially given the constant stream of headlines these days. But Lawrence, if someone listening feels uneasy about how all of this affects their own financial plan, what should they do?
Well, they should start by revisiting their own plan and making sure it still aligns with their goals, their time horizon, and their comfort with risk. I'd also like to add one of the most valuable benefits of working with a financial advisor is that you don't have to manage all of this alone. World events are constantly changing, headlines are shifting, markets shift, asset classes move at different speeds, and what was balanced 6 months ago may not be as balanced today based upon how things are adjusting. And a big part of our role as advisors is proactively managing portfolios, rebalancing when necessary, adjusting allocations thoughtfully, and making sure the investment strategy continues to support our clients' broader financial plan. That ongoing oversight helps keep emotions out of decision making and ensures that short-term headlines don't derail long-term goals. It's about staying disciplined, staying diversified, and keeping a plan on track even when the world feels uncertain.
Oh, yeah, that makes a lot of sense. Having someone watching the portfolio, adjusting as conditions change instead of reacting after the fact. And hey, that's kind of what you do, right?
It absolutely is. And it's not about predicting every headline, every market move. It's about having a process in place and a professional partner who's monitoring things proactively so clients can stay focused on their lives and not on the day-to-day noise in the market.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA, SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Merrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth. Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.